Donald Trump has signed an executive order to review the H-1B visa program. And secondly, TCS reported a rather muted fourth quarter, though the management remains that, in fact, that directionally positive for FY18. To discuss more what's happening in the sector on the whole, we're joined by Girish, Head of Research, Nirmal Institutional Equities, as well as Mr. Mishra, the Research Director at Gartner. Thanks so much, gentlemen, for joining in today. Girish, let's come across to you first. TCS reported a rather weaker set of numbers. We've seen the stock really bobbing around in today's trading session. First things first, I think you have a sell on both TCS as well as Infosys. If you could give us some price targets and the outlook going ahead.
Yeah, so on TCS, my price target is 1996. That's like a 14% downside from yesterday's close. And Infosys, my price target is 887. It's probably a downside from, I think today it's probably 910 or thereabout. So both stocks do have a downside, and I think on TCS, my worry is that the 26 to 28% aspirational margin that the company's got will probably not come through. I mean, I understand this is constant currency, but even if you take INR out of the equation, I think that there's going to be margin downside. On Infosys, I do have issues with the 6.5 to 8.5% number. I think that is a fairly aggressive number considering the fact that the company is talking about first half driven growth, and the BFSI sector, which forms a third of its revenues, is the kicker is going to come in the second half. So I really don't know how the revenues are going to pan out for Infosys to deliver that kind of a number. So we've been negative on the sector for almost 2 years now, and continue to be so. I think there are obviously some of the headwinds which are probably going to come through in the next few quarters and months.
Girish, any possibility of Infosys missing the low end of the guidance, 6.5%?
There is a fair chance. See, I think the BFSI commentary that's come through from both Infosys and TCS is conditional. Right. Basically, they're saying that the customers seem positively poised to spend, but some things have to happen, like deregulation in the financial services space. They're talking about credit growth picking up. They're talking about rates being hiked. I'm not sure all of that is going to come through in 2017. So my sense is that, probably the kind of rebound in growth that one is expecting in BFSI is probably not going to happen. And that could be the reason why we could probably see a lower number than the 6.5 number that Infosys gave.
Okay, let's get in D.D. Mishra, the Research Director at Gartner, as well into the discussion. Mr. Mishra, the only guidance that we have is that from Infosys. Infosys is guiding for 6.5 to 8.5% constant currency revenue growth in F518. Do you think that's where the industry is going to be, or do you think, is that the sense that you get? Because if yes, it implies that F518 growth could be lower than what we saw in F517.
Yes, of course, and I feel that the dream run of Indian IT companies is going to slow down, because there are a number of factors we need to look at the way the things are unfolding. We are seeing that huge cannibalization of revenue which is happening, and because of the shift from more traditional sources to more nonlinear sources of revenue. And we have seen the huge shift towards more industrialized and digitalization, which is actually preventing the kind of growth which is used to happen. And for many Indian IT companies, the traditional sources has been more dominating, and this mix is going to change. And if you look at the way TCS and other companies who have grown their digital revenue, it is phenomenal. But what I would say that is during this particular period, the shift is happening. There will be some disruption, and which we have to live with. And next 2 to 3 years, we will see that the IT companies will be changing the gear towards more digital sources, and this is where you will see that more and more the pressure on their revenue will come from the kind of changes which they are going through their business model. I find that this is a kind of creative destruction which is needed at this point in time, and this is not something we need to be worried about. This is a kind of a change which was inevitable. But On top of that, we also need to see that there is another shift which is happening, and that is towards the autonomics. And we are seeing that more and more jobs getting automated, and the machines are taking over humans in terms of delivering services. Now, that is again one more area where the price is going to come down, and there will be cutthroat competition in the market, which we have to live with. And the third factor we are seeing is that the changes in the regulations which are happening, which is again going to have some impact on it. And this is something, all three are actually creating a kind of a scenario where we will have to see some amount of muted growth.
Negative both on TCS as well as Infosys. You like anything in the IT pack? Is anything looking good, maybe from the mid caps or some of those frontline IT stocks, or are you negative on the entire sector?
We've been negative on the entire sector for almost a year now, so we have a sell on almost every stock. Though I think maybe in certain cases these stocks have come off so much that near to our target price, we'll have to probably relook at those recommendations. But as things stand right now, I would continue to have a sell. And I think the additional pressure point is coming from the H1B side, and today's executive order does indicate that you will probably definitely see pressure, if not in FY18, definitely in FY19. The fact that Donald Trump is suggesting that the H1B visa should be awarded to the most skilled or highest paid petitioners does mean that the wage levels will have to go up pretty substantially in FY19. And quite possibly it may happen in FY18 also, because the visas have not been given out. The applications have come in, and there's a team of people who have been kind of set up. I mean, in the sense that there is a Secretary of State, the Attorney General, the Secretary of Labor, and Secretary of Homeland Security have all been told to suggest reforms to help ensure that H1B visas are awarded to the most skilled and the highest paid petition beneficiary. And the time frame is as soon as practicable. Now, it's very difficult to say whether it's going to get implemented in the next 6 months, or whether it's going to take a longer period of time, and when they're going to come up with any suggestions and stuff like that. But definitely FY19, this is probably going to get implemented. FY18 maybe, but I think the companies themselves will move towards a situation where they're going to do more local hiring. And I think the renewals could potentially feel pressure, because the existing H1B visa holders sitting in the US, I think a third of them will have to renew their visas. And I think they will probably see wage increases based on whatever memo that was put out by United States Citizenship and Immigration Services Department end of March. So I do think there's going to be wage pressure. There's going to be probably a lower utilization on site. There's going to be probably higher subcontractor costs that the Indian companies will have to bear. All these costs have been at least the subcontract cost has been going down last few quarters, but I think there's going to be a reversal of that in FY18. So all these things, in my opinion, are going to lead to margin pressures, and we'll have to and obviously the INR has been another issue that we'll have to grapple with. So all these things put together, I'll have to revisit my earnings estimates and take a fresh look at some of these stocks. But as things stand right now, everything is a sell.
Girish and Mr. Mishra, thank you very much for joining in. By the way, those are